Welcome back to Alpha Recap, where we break down the biggest market moves from the day in plain language. As always, if you have questions, you can reach us at stockalpha.ai. Ready to dive in?
Absolutely. We had a pretty headline-heavy session. Balance sheet crypto, a big chip pop, and a few enterprise and green tech updates all competing for attention.
Let's start with the headliner that stopped people in their tracks. A public company disclosed a huge stake in Ether, about 4.9 million Ether, which translates to roughly 4% of the roughly 120 million Ether supply. That company also reported about $11.8 billion in combined crypto and cash on its balance sheet.
Yeah, that tracks. So, what really stands out here is just the scale. When a listed company holds that much crypto on its books, it ties their equity performance to Ether price moves in a meaningful way.
Right. The disclosure said they're about 81% of the way to a 5% target allocation. And they completed a move from a smaller exchange to the New York Stock Exchange earlier this month. That NYSE transfer could broaden investor access and add liquidity to the stock itself.
I mean, when you step back and look at this, there are two big effects. On the upside, corporate accumulation can be a structural source of demand for Ether. On the downside, it creates a concentrated seller if they ever need to rebalance or raise cash.
Exactly. Analysts will be watching on-chain flows, wallet movements, staking activity, or over-the-counter sales, because those are immediate catalysts that could spike Ether volatility. Not the neatest setup for calm markets.
Mm-hmm.
And beyond price mechanics, there are regulatory and custodial questions. When public companies amass crypto treasuries, custodial arrangements, reporting standards, and disclosure cycles become part of the risk checklist analysts run.
Right. And the other thing is transparency. The fact the company disclosed its exact progress toward a 5% goal gives the market something concrete to model. But it also means everyone will be looking for follow-up filings and wallet activity.
Exactly. So what really stands out here is how a single corporate treasury move can cross-link public equity volatility and on-chain dynamics.
Short reactions.
Big move.
Wow, that's big.
Okay, moving from crypto to chips. The semiconductor space also had a notable session. One major chip maker finished the day up about 4.5% to about $65.20. And that jump came on heavy volume, roughly 110 million shares traded. That kind of volume suggests active repositioning, not just a quiet bounce.
Honestly, I was a bit surprised by this one. Heavy volume with a sizable percentage gain tends to signal conviction among traders, and it often pulls related names higher in the short term, especially sector ETFs and peers.
Traders will want to see if the price holds above those intraday highs, or if it retreats on follow-through volume. Options flow and analyst commentary tomorrow will be a clue whether this was momentum or just a one-day reprieve.
And there was a complimentary note on photonics. A tooling company won a Lightwave Innovation Award for an active alignment solution that could help scale photonics chip production. That's the kind of engineering validation that can precede pilot orders or production ramps.
Photonics matters because data center optics are a capacity bottleneck. Advances in alignment tooling could ease manufacturing constraints and indirectly support demand for semiconductors and related supply chains.
So, what really stands out here is the hardware plus tooling dynamic. Strength in core semiconductors plus wins in production tools can signal a durable CapEx cycle if it carries through.
Let's shift to enterprise software and workplace tech. Nucleus Research's Value Matrix named 7 workforce management leaders, and the theme most analysts highlighted was a move from pure scheduling efficiency to real-time operational ROI.
That's a crucial shift. Vendors who can show real-time analytics and on-the-ground operations automation will likely be favored in contract renewals and new deals.
Exactly. And distribution moves matter too. A visitor management vendor got embedded into a global workplace services platform, which could accelerate recurring revenue if adoption follows. Third-party validation and channel embeds often precede visible customer wins.
Mm-hmm.
There were also a few edtech and talent moves. award wins, and leadership promotions that signal companies investing in execution and delivery. Those aren't immediate market movers, but they support longer-term product execution.
Short reactions.
Notable, but patient.
Make sense?
On sustainability and greentech, a materials company landed back on a top greentech list and placed highly in its state. Good for reputation and partnerships. Meanwhile, a water management company launched a modular floating cover product intended to cut evaporation and deter birds.
Those kinds of product launches show the sector is moving from concept to commercialization. But we should flag the caveat. The water cover product didn't disclose unit economics or performance metrics, so pilots and municipal procurement cycles will matter for revenue visibility.
Right. Analysts will watch for pilot contracts and measurable performance results before adjusting valuation models. Recognition from industry lists helps introduce potential partners, but it's the paid pilots and procurement wins that show real progress.
Yeah, that tracks.
Quick local note. A healthcare CEO got a leadership award, and a credit union promoted 2 IT executives. Both are reputational or operational updates rather than direct market catalysts.
Right. They matter more for the company's story than for short-term price action.
Before we wrap, let's pull together the patterns we saw today. Institutional crypto accumulation is becoming a recurring theme. Companies holding material crypto treasuries increase the correlation between crypto markets and equity volatility.
Real-time enterprise operations is another theme. Buyers are shifting to solutions that offer operational ROI rather than just scheduling efficiency, and channel embeds can accelerate adoption.
And finally, hardware plus tooling convergence. Semiconductor momentum was echoed by tooling awards, which suggests CapEx and supply chain investments may stretch beyond chips into production enablers.
Those patterns suggest to analysts that follow-through data is critical. On-chain flows, pilot results, contract economics, and commercial orders will determine whether these headlines produce durable valuation changes.
So, what should listeners watch tomorrow? First, on the crypto front, any on-chain movements from that company's wallets, staking activity, or follow-up disclosures tied to treasury management. Those are potential volatility catalysts for both Ether and the stock.
Second, for the chip name, watch post-session price action, options flow, and any analyst notes that confirm whether the move had staying power.
Third, on enterprise software, keep an eye out for vendor announcements and contract wins that reference real-time operations adoption. Nucleus's value matrix will be a near-term benchmark analysts use.
And don't forget photonics commercialization. Any pilot orders or production program updates tied to that award-winning alignment tool would be meaningful for supply chain expectations.
Also, greentech pilots and municipal procurement updates for that water cover product. And commercialization milestones from the materials company will be worth tracking.
Quick reactions.
Lots to watch.
Yep.
All right. Bottom line, today's briefs highlighted concentrated balance sheet crypto exposure, semiconductor momentum, and enterprise product validation as cross-cutting catalysts. Analysts note these items can create volatility and re-rating scenarios, but they need follow-through data before they change durable valuations.
Important reminder, this is informational only. We're not giving personalized investment advice, and we're not recommending anyone buy, sell, or hold any specific security. Analysts' note and market data cited are meant to inform research and due diligence, not to serve as trade instructions.
Great point. If you want our sources or links to the filings and awards we discussed, head to stockalpha.ai.
And if you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai.
Thanks for listening to Alpha Recap. We'll be back after the next session with more digestible market highlights. Good night.